I'll be speaking to us today on the topic investment in the Nigerian capital market, understanding the dynamics towards profitable returns on investment. And from a slide, I have what I call the roadmap, which is like the content, introduction. You have understanding the financial market, functions of the financial market, types of financial markets, understanding the capital market. Under the types of financial market, you have the capital market and the money market. And of course, under the capital market, you have the primary and secondary markets. You also have other markets. Then we talk about the capital market structure with SEC as the apex regulator. We have the NGX, which was formerly called NSE. Pardon me if you say NSE, don't worry, I'm trying to not to forget the old, but you will see it as I speak that in the content you have excuse me, you have NGX, which is the Nigerian stock exchange market. You have the FMDQ, which is a competitor. FMDQ initially was registered to provide platform for debt instruments, but now they have a license to also do equities and not just debt market, but also equities. And of course, we have the security depository. Apart from that, also under the platform, we also have the NASD, which is the alternative market for unlisted stocks or unquoted stocks. Then we have NCX, that is commodity exchange. Then we have the platforms where tradings are done on daily basis, where tradings are recorded. Tradings that are done are recorded on daily basis. We have the CSCS, which is the one that has been there forever. But the government has also licensed the one for FMDQ depository. Then we have what we call the NIPS, which is for the capital market, the money market, Nigerian Interbank Settlement System, and so on and so forth. So by way of introduction, you bear with me. I have a little bit of code. So if you see me cough, I think I've allowed AC to deal with me a little bit. So please pardon me. The Nigerian economy gross domestic product (GDP) by way of introduction grew at 3.4% in 2021, and it's been recorded that this is the strongest since 2014. While the Nigerian capital market slowed down, but its equity segment recorded positive performance indices in 2021. The index was up 17.42%, market capitalization by 17.26%, and year-on-year return was 6.07%. So the Nigerian capital market did not do badly in 2021. So far, most of the big quoted companies, blue chip ones, have done their AGM, and almost all of them paid one form of dividend or the other, either cash dividend or scrip dividend, and so on and so forth. So the equity market has not done badly all over the world. It has outperformed a lot of other markets. A major driver of activity in the capital market are the real sectors of the economy, whose success largely depend on government policies and regulations. All of us will agree with him that in Nigeria, the government is the biggest player in the economy. Yes, they may not be so much involved in the economic activities as in terms of real sector, but the enabling environment, the regulatory environment is provided by the government. And just one regulation, one law, one decree, one edict at the state level, or one state law can change the face of any business, tax law, environmental impact laws, a lot can change the system, can make a company to go down, can make a company to come up. So the government is very, very key to the success of any economy. Remember, when the borders were closed, it affected a lot of our companies, including quoted companies, because it will affect the way goods and people move across the borders. Nonetheless, there are diverse non-real sectors that also facilitate economic development, without which the real sector may not thrive. Having a thorough understanding of the backbone of on which the capital market thrives is the first pathway to making a profitable investment decision within the Nigerian capital market. So for you to be able to invest profitably in the Nigerian capital market, you must understand the backbone of the economy. You must understand the configuration of the economy. You must understand the sentiments of the economy. You must understand the players in the economy. And like I said, the financial market in Nigeria is divided into two major sectors: the capital market and the money market. And the financial market broadly refers to any marketplace where the trading of securities occur, including the stock market, the bond market, forex, foreign exchange market, and the derivatives market, amongst others. And all this combined together makes an economy to thrive or not to thrive. So the success of the financial market, to a large extent, contributes immensely to the development of any economy, because no matter the business you are involved, you need finances to make it work, either at the money market level or raising long-term capital through the capital market in Nigeria. The function of the financial market, I'm now on slide, I think it should be slide 4. Function of the financial market: it ensures liquidity of tradable assets by facilitating the exchange of securities. It determines the prices at which securities are traded by monitoring demand and supply forces. Of course, in the capital market and even in the money market, the forces of demand and supply determine how the market play out. It provides a saving platform for idle funds by converting them into securities. If you have idle funds, of course, you can either bring them to the money market through the banks and other financial institutions to have a return on your investment, or through the capital market by way of equities, or by way of bonds, or even mutual funds and other form of issues in the market. It provides access to different types of information that may be required by both the lenders and borrowers in making sound investment decisions. For you to make sound investment decisions, you must have information, you must gather data, and of course, you need professionals to also advise you and support you, as the case may be. The financial market helps in saving the time, efforts, and money of the trading parties, as they need not spend resources in finding potential buyers or sellers. For example, in the capital market or even in the bank, you don't have to travel all the way from Ibadan, all the way from Kano, Kaduna, Jigawa, and rest to come to Lagos to trade on the stock exchange. All you need to do is to get your stockbroker or your financial advisors to assist you to either buy or to sell. And even if it is primary market offerings, you go to your bank and other outlets to make your application, and of course, you pay your money through the banking system. And thank God today, you have what we call straight throughput, such that when you sell your shares now, your fund does not have to go to any broker, it comes directly to your account. Of course, after the broker must have deducted their own commissions, either as if you are buying or you are selling, as the case may be. Types of financial market, next slide, I've mentioned that to you before. You have the money market, you have the capital market, you have the derivative market, and each of them, for example, money market provides short-term financing and investment. You want to take loan in the bank, short-term loan, 3 months, 6 months, or you want to place money for short periods, you go to the money market. And of course, return on investment is by either mostly by interest that excuse me, that accrues to you. And the capital market is a market or a platform that allows for long-term trading of debts and equity-backed securities. Equities can be there as long as you want it. You can enter, you can exit at any point in time. Of course, your return will be based on the performance of the company and what the directors are declaring at any AGM. And there is a platform that allows the long-term trading of debts and equity-backed securities. And one good thing about the capital market is that you can exit and join at any point in time, though there's a caveat that if the company is not performing very well, you may not see buyers to buy. But in most cases, stocks, not all cases, stocks are always available for you to buy and to sell at any time on the floor of the exchange. The derivative market provides instruments for the management of financial and associated risks. As the word goes derived, it is derived from a particular activity. Commodity market, that's where you sell tangible commodities, cocoa produce or produce, you trade produce, future, the future where you don't, you may not get the item immediately, but you bid for them because they may still be farming season. The harvest time may not have come, but you buy in advance. It facilitates the trading of commodities like cocoa. You don't have to know the suppliers. You don't have to know the farmer. You also still go to the market, buy, and supply to your warehouse, as the case may be. Of course, the FX market, where you buy pounds, dollar, and so on and so forth, especially when you trade across borders. The next slide, I've just explained it. So in the capital market, next slide. In the capital market, like I said before, we have the capital market and the money market. In the capital market, we have the primary market. That is where new stock offers are made to the public. And secondary market is where existing stocks are traded by investors through their appointed agents, usually called stockbrokers. Though you can go through some sub-brokers who cannot do directly on the stock exchange. They have to go through a licensed stockbroker, either on the stock exchange, NGX, which is the stock exchange, or the FMDQ, as the case may be, or even through NASD, which is the market where unquoted stocks or unlisted stocks are sold and bought. Primary market, understanding the market, the primary market. Primary market, in this market, new securities are offered to investors. In particular, this market allows companies to raise capital by issuing either common or preferred stock. These are then sold via a mechanism known as an initial public offering. What does that mean? A company may be in need of, maybe they want to improve their factory, they want to buy new machineries, they want to build, they want to introduce new things into the market, financial instruments and the rest of them. They want to build more branches as a bank, we are quoted, as a manufacturing concern. You want to renew your machine, you want to buy new machineries, or you want to remodel your factory and you need more money. And what you have in your reserves is unable to do these new initiatives and to see have working capital. You approach the capital market through an issuing house. Of course, you get approval from SEC through your issuing house. You get approval from the NGX or FMDQ to your stockbroker so that those shares that are being offered can be listed on the stock exchange. And it is so easy these days. We have a lot of well-versed and well-experienced capital market operators. However, before any of this can be done, you have to get, of course, approvals from shareholders. Even if you're a private company, you have some shareholders. If you want to now come public, you have to get approval, of course, first and foremost from your from your board. Excuse me, please, from your board. And if it's a listed company, you have to come to the AGM or to an AGM to get approval from the shareholders before you can go to the public. And like I said, it's actually a public offering where the shares in issue are being offered, or authorized shares are being offered to the investing public, either existing shareholders or new ones. And especially if you're coming to the market for the first time, of course, you'll be offering to the general public to come and buy. And you can also come in through what we call, you can be listed on the stock exchange through what we call offer by introduction. That is existing shareholders listing their stocks on the floor, but ceding a percentage of it to be sold to the general public. So the primary market is just a market for new offerings, either initial or additional. And that's what we call rights issue. And rights issue is the market for that shares that are the share capital that are not issued or issued share capital are being offered to existing shareholders so that there won't be a dilution of shareholding. But when it is thrown to the public, there's bound to be dilution. So we have what we call the secondary market. Secondary market is a market where existing shares, already quoted shares, are traded. And this is done on a daily basis, Monday to Friday, on the floor of the stock exchange. Thank God now we have gone beyond what we used to do those days when we have what we call over, when everybody will be shouting on top of their voices at the stock exchange. Today, as a broker, you can sit in your home or in your offices and trade through the market, online market mechanism. And like I said earlier on, investors can trade their instruments or either on organized exchanges like NGX or FMDQ, or over-the-counter OTC, which is for unlisted stocks. In Nigeria today, we have only NASD that does that. Securities traded on an exchange includes stocks, stock options, and bonds. The OTC market includes stocks that are not listed on any exchange. And there are many companies today that are doing very well in Nigeria, but they are not listed on the stock exchange, but they are traded on the NASD or the OTC market. Companies like West African Milk, WAMCO, companies like Niger Delta Exploration Company, and so on and so forth. So there are good stocks that are not traded on the regular stock exchanges, organized exchanges, but they are traded OTC via NASD. The distinction between primary and secondary market. Primary market is the trading of new issues by new or existing companies. I've already explained that. While in the secondary market, trading of existing shares are done. Securities are sold directly by the company to the investors in the primary market. Transfers are between investors in the secondary market, and of course, you must use a stockbroker to do that. Securities are only bought in the primary market, not sold, except in rare cases. Both buying and selling of securities are done in the secondary market. Maybe I should explain the first one. Securities are only bought in the primary market, not sold, except in rare cases. Those cases are when you have what we call offer for sale. Offer for sale. I'm an existing shareholder. We are not listed. They want to be listed, and I want to sell part of my shares to the public. That's called offer for sale. So which means the money is not going to the company, but the money is going to an existing shareholder. So that's the difference. That money from that share is not going to the company. So in that case, the company is not actually raising fund, but the company wants to get listed, and for them to get listed, some existing shareholder have to part with some of their shares, and that's why it's called offer for sale. So an existing shareholder selling part of the shares to the public so that the company can be listed. So under primary market, prices are decided by the management of the company after necessary regulatory considerations. Before now, it used to be regulatory approval. Prices those days must be approved by SEC before you can sell. But today, they only approve the offer. SEC does not approve the prices again. It is done, it's fixed by the company and the unions. Whereas in secondary market, prices are determined on the basis of demand and supply. That's what we call the forces of the market. Next slide. In the capital market, I want to talk about the capital market and the money market. I know many of us are vast in these areas, but what we are doing is just more or less training and retraining, refresher course, so to say. So in the trading, capital market, trading of long-term debts and equity-backed securities are done. Money market, trading of only short-term debts, placement, 3 months, 6 months, 9 months, and so on and so forth. In the capital market, instruments include shares, bonds, and government securities. Whereas in the money market, we have treasury bills, commercial papers, CPs, certificates of deposit, CDs, and bills of exchange. In the capital market, they are very formal in nature. Money market, they are not as formal. Capital market, relatively liquid, unlike money market. Money market, they are highly liquid. You can put your money there today and you can take it tomorrow. Capital market is high risk because the company you invest in may go into oblivion. They may collect money today and next tomorrow they are no longer there. So you lose the percentage or the number of shareholding that you have put there. But in the money market, it's most unlikely that you lose your money. Low risk. Hence, the return on investment is also not as much. But one thing about the money market today is that even if the bank has an issue, they are insured by NDIC to a particular amount. I think it used to be those days 100,000 or so. I think that has improved now. But even at that, if the bank is taking over, if you're a depositor, you get your money almost 100%. You are sure these days because CBN do not allow banks to go there again. The worst case scenario is they take over the bank and the shareholders may lose, but those people who place money there, the depositors, don't lose their money again. In the capital market, participants include stockbrokers, underwriters, mutual funds, individual investors, and so on and so forth. Whereas in the money market, participants include commercial banks, non-core banking finance companies that are registered or licensed as such by either CBN or by SEC. The next is the structure of the capital market and the players. We have the SEC, the Securities and Exchange Commission, which is the apex regulator that gives license every participant, whether they are corporates or individuals, and some other professional bodies. Any professional body that must play in the capital market must be registered by SEC. You want to call yourself financial lawyer or capital market lawyer, you are financial advisor, you are a stockbroker, you are a rating agency. If you must participate in the capital market, you must be registered by SEC. We have what we call the SROs, the self-regulatory authorities or organizations in the stock market. You have NGX, the Nigerian Stock Exchange. You have the FMDQ. You have the NASD, which is unlisted securities, and of course you have the commodities market. And we have a lot of commodities market now. We have the NGX, NCS, we have the Lagos commodity market, and so on and so forth. And we have what we call the CMOs, the capital market operators. There you have the brokers, the dealers, the clearing and settlement systems, CSDs or CSCS, the registrars, sub-dealers, sub-brokers, portfolio managers, fund managers, trustees, solicitors, custodians, reporting accountants, auditors, and so on and so forth. Like I mentioned before, for you to operate in the market, you must be registered. There's what we call the four-tiered market structure. The SEC, which I mentioned earlier on, the stock exchanges, the CSDs, which Nigeria we call our own CSCS, which is the oldest one. The second one has been registered, which is FMDQ NSD, and of course you have other participants. I don't want to bore you with, because in passing I've mentioned what each of them does. But okay, let me quickly say, SEC is responsible for regulation and oversight of the market, issuing licenses to operators and registering securities for trading. It also sanctions any evaluation of the rules or existing security laws. And of course, they are also there to develop the market. They are not just only to regulate, but they are also to develop the market. So, and they do a lot in this respect, training and retraining, and ensuring the market has depth, and so on and so forth. The exchange, the NGX, oversees the organized trading in capital markets products, including stocks, mutual funds, treasury bills, and bonds. And today, there is the FMDQ that does mainly bonds, treasury bills, and so on and so forth. Though they've also been licensed to do equities. The CSS main function is to clear and settle trades executed on the NGX and even now on FMDQ. However, it also provides registrar services to corporate organizations that are listed on the NSE. There are two depositories in Nigeria, I mentioned it before. The CSCS, please ignore not CSCS and NSE, the CSCS and FMDQ NSD. Of course, SEC is the main regulatory institution in Nigeria. I mentioned that before. It used to be supervised by the Ministry of Industry and Investment, but I think it's now under the purview of Federal Ministry of Finance. It's been up and down. I think at times there was a time that the Federal Ministry of Finance and Investment were together as one entity. I think they've been broken again into two. The story of SEC cannot be complete without mentioning the central bank, who set up what we call the Capital Issues Committee in 1962, which eventually metamorphosed into SEC in 1977 before it now has a decree, number 71 of 1979. And eventually we now have what we call the Investment and Securities Act of 1999, which is also the Investment and Securities Act is actually the major law governing the capital market. And of course, that's what SEC uses to do whatever they have to do in the market. Functions of SEC, I've mentioned that in passing. I've mentioned the issue of market regulation. I mentioned the issue of market development. So if you want more, market regulation, registration, inspection, surveillance, rulemaking, enforcement, and of course, investigation. And market development, they organize workshops and seminars, town hall meetings, television and radio jingles and programs. They introduce e-processes, e.g. dividend, e-allotment, of course, in conjunction with capital market operators like the registrars, the stockbrokers, the GRCs. We do all this together. Secondary school quiz and essay competition, SEC has been doing that for years. And of course, introduction of capital market studies in tertiary institutions. And in fact, recently, the SEC, in conjunction with the market, actually, they've been crafting a curriculum, capital market curriculum, for secondary schools and, of course, higher institutions of learning in Nigeria. The Nigerian Stock Exchange, I don't have to overburden us on that. I've mentioned what they do, and I've mentioned the fact that they were the major exchange where trading of stocks are done Monday to Friday, but FMDQ has also been registered to compete with them. The principal activities of FMDQ provide an organized market for dealing in fixed income securities, including treasury bills, bonds, commercial papers, certificate of deposit, and other debt instruments. Provide a facility or platform for listing of debt securities issued by private sector entities in Nigeria, corporate bonds. Operate a centralized data center for storing all information related to transactions executed on that platform. And of course, publish various indices for use in the Nigerian debt market. But like I said earlier on, they've also now been licensed to do equities. NASD, I told you earlier on, is an OTC, over the counter for trading in securities that are not listed. The commodity exchange, NCX, I've also told you, what do they do? It's an organized market for sellers and buyers of agricultural commodities and solid minerals. The exchange commenced trading in agri-commodities in 2006 and opened its spot market in Kano in 2008 to further deepen the market and open a new window in agricultural financing, especially to the small-holder farmers, who are the majority of Nigerian farmers and have little access to credit from the commercial banks. The NCX introduced trading of electronic commodity receipts for cocoa, sesame seed, cashew, paddy rice, maize, sorghum, and soybean in July 2014. There's a new government policy to drive the activities of the stock of the commodity exchanges. And like I said, you have the NCX, you also now have the Lagos Commodity Exchange. And what are they doing? Basically, to ensure farmers and solid mineral producers are encouraged to trade their wares without getting spoiled. But at times, most farmers, before they get their wares in the market, those things get spoiled. But with the NCE or NCX, you are able to actually sell off your produce, even when they are yet to be harvested, so that this NCX can actually warehouse them before eventually send them to the eventual beneficiaries. Dynamics of the capital of the global economic development. The global economy was projected to grow by 6.1% in 2021 and 3.6% in 2022 and 2023. That's IMF. Increased global energy prices plus pandemic stimuli triggered global inflationary pressures, shifting economic growth to energy exporting countries from energy importing ones, rebound of international trade, increased adoption of monetary policy normalization in USA and UK, Sub-Saharan Africa GDP growth revised upwards to 3.8% from 3.4%. Central banks intensify stimulus rollback, bond buying, especially in USA and UK. And of course, Africa, we have what we call AFTA, which has potential market of $3 trillion. And it is to lift interregional trade to 20% for Africa, compared to 60% in Asia and 70% in European Union. What has happened over the years is that African countries don't trade with themselves, but with AFTA, this will change tremendously. For several years, the stock exchange, next slide, the stock exchange was owned as a commonwealth. It was limited by guarantee, not really owned by anybody. It was a non-profit organization. It was not making returns to anybody. But in the past 5 years, the issue of demutualization has been on the front burner, and that was executed last year. The stock exchange was unbundled. The Nigerian Stock Exchange, that's why it's now called NGX, was unbundled and now they have shareholders. They are now owned. Yes, they were owned before, not by shareholders, but by some people, brokers, and whatever. But it's now been unbundled, demutualized, such that we now have shareholders. It is now a profit-making organization, and it's now listed on the NASD, such that you can trade your shares if you are a owner. Other dynamics within the capital market, the CSCS have told us what it is. I've mentioned new issues and listings, so we may skip that. Industry dynamics, the next slide. Today, you can do electronic filing of your annual report and financial statement as a capital market operator, either a registrar or a stockbroker. And also, the capital market has become more, it has been better regulated than before. You can do electronic filing, like I said. Now you can do e-meetings, e-AGMs, and of course, you must also disclose persons with significant control of companies. No more under the table deals. When you are buying a particular threshold, you must inform the stock exchange, especially when you have 5% of any stock. And then when you're a person of interest, especially if you are a director of the company or a family member of a director of a company, whatever the quantity of shares that they are buying on the floor of the exchange, it must be disclosed to the NSE and to the public. That is full disclosure. That's corporate governance. Corporate governance over the year has improved, and that is why people are having more interest in coming to the market, into the capital market in Nigeria. Potential impact on business for all these. If you are a company and you are not complying, of course, there is penalty. It saves investors from loss of investment and also boosts confidence in the capital market. Between 2007, 8, 9, and up to recent time, the capital market confidence was eroded because of the losses sustained by investors in the capital market in those days. But then, over the years, both the SEC and the Federal Ministry of Finance and even CBN have become more stringent with their regulations, such that it will discourage bad behavior and encourage people who are doing things rightly. So a lot of people left the capital market, but today I'm happy to say that many are coming back. We can still do better than what we are doing, but we are taking steps in the right direction. Payment of dividends are enhanced if corporate governance is a trend in any business. I've mentioned the fact that we are now mandated to disclose persons, either beneficial owners or nominees of an interested person with significant control in our business. Before now, if a nominee company buys shares 5%, they may not disclose who is the beneficial owner. But today, it is expected that the beneficial owner is unveiled. That is unveiling the masquerade. Today also inclusive participation through proxy nominations and live streaming of AGMs. Since the pandemic, most companies have not returned to full AGM. However, there's live stream that you can join online, and of course, you have the power to appoint a proxy among the list of proxies nominated by the larger company. Capital market pricing dynamics. Here I want to tell us about the factors influencing prices in the capital market. One of them is company's news and performance. If the company from time to time is giving good news releases on earnings and profits on a quarterly basis, announcement of dividends, introduction of a new product or a product recall, securing a new large contract, employees layoff, anticipated takeover or merger, a change of management, accounting errors or scandals, can affect pricing either negatively or positively. It can be positive, it can be negative. Please go to the next slide. I've moved from that slide. Yes, this is where I am now. Industry performance, for example. Often the stock price of the companies in the same industry will move in tandem with each other. This is because market conditions generally affect the companies in the same industry the same way. So it's expected that if company A is in a particular industry and they are doing very well, in most cases, it will also, if you don't mind, please let me just sip water. So in most cases, when the company is doing very well, it will have what I call the bandwagon effect on the same on another company within that industry. They may not have the same prices, but for example, if the result of a Cadbury has come out and they did very well, most likely Nestle, not in all cases, but most likely Nestle, most likely Wanko will also do very well. So it may affect their pricing either positively or negatively, as the case may be. Investor sentiment. It's also just what we call the herd mentality in the banking, in the capital market. If a particular broker is becoming bullish, is buying. Everybody, some other people say, hey, if so person is buying, let me also buy. That's herd mentality. You may buy for a particular purpose, but in most cases, it affects the way others behave at that point in time. So also if somebody is selling and is a non-broker, others may be selling too, because they are saying, if this person is selling, there may be something that is negative. Not in all cases, but we have what I call X mentality, where you want to follow a particular course of action, not because you have done your own research, because others are either selling or buying. And that affects a lot of investors in Nigeria. That's why we always say, before you take investment decision, contact professionals who can advise you appropriately. What are the 10 things to consider before you make investment decisions? We're talking about investment decisions. Number one, draw a personal financial roadmap. What do you want to achieve? You must have a roadmap. You must say, I want to achieve so percentage in terms of return on my investment, either in terms of capital appreciation or dividend. Evaluate your comfort zone in taking on risk. When you want to take risk, what level of risk can you take? A company was sold at 5 naira. You bought at 5 naira on the floor. It's now 7 naira. Do you want to sell and make do with your 40% increase? Or you think it will get to 5 to 10 naira, 100%? Or you think it will get to 20 naira, more than 100%? At every point in time, you must be ready to define your risk appetite and what you're looking at. But if you are in need for a long term, of course, you won't bother whether the market forces is bringing down the stock or not. So, but you must consider an appropriate mix of investment. Don't put all your eggs in one basket. Don't put all your eggs in one basket, because if the basket falls, if you trip and the basket falls, all the eggs will break. So, but make your basket to be in different baskets, so that even if if you trip and one basket falls, only the eggs in that one will be broken. Be careful of investing heavily in shares of employers' stock or any individual stock. Create and maintain an emergency fund. Don't put, it's the same thing. Don't put all your eggs in one basket. You have 100,000 naira. Don't invest all in the capital market. Let some be in capital market, make some to be in the money market, and let some be very, very liquid, so that if there are issues, you can easily swing. Pay off high interest credit card debt. In Nigeria, we don't normally have credit cards, but reduce your debts. Don't be investing so much somewhere while you're also heavily indebted. Consider dollar or currency cost averaging. Consider investing in the FX market too. It will help you to hedge against inflation. For example, those people against inflation, against exchange loss. For example, those people who invested in the FX market early this year, they are smiling to the bank because the rates of Naira actually depreciated so much. Take advantage of free money from your employer. What do I mean by free money? You have bonuses here and there. You are sent on training, and you have some amount left, either outside Nigeria or within Nigeria. Don't just spend. Don't be expense strict. Those money may not flow the way they are flowing now in the future. Ensure you save for the rainy day. And for those of you that can grab one of my books, it's called When Tomorrow Comes. When Tomorrow Comes, Preparing for Retirement. You can grab that book. You can check it online. Or if you can't see it online, get back to me. I will tell you how to get it. So when you have free money, so to say, from your employers, ensure that you don't use your 10 fingers to eat, like my mother would say. For example, you are a middle level officer and you are sent on training, you get your extra code. Don't spend everything on buying clothes and buying whatever. Save part of it. And even you are given money to fly business class, you can make do with premium economy or even with economy if you decide it's not too long, and save part of the money, especially when you're just growing up in the industry or your industry. Consider rebalancing your portfolio occasionally. Of course, employ a professional to do that. Let them help you look at your portfolio from time to time to rebalance it. They may ask you, sell this off, buy more of this, increase this, reduce this, as the case may be. So don't just say, I've invested, investment now and once and for all. No. Don't be like some of us who have invested in some companies and they have been there forever. And today, those certificates have become ordinary paper in our hands. Those companies have died because sentiments don't allow us to sell them when we should have sold them. So always ensure that you have a professional to make a call. Avoid circumstances that can lead to fraud. Don't give room for anybody to defraud you. Financial prosperity is a deliberate act. How do I mean? It's deliberate. It must be deliberate. It must be intentional, and it must be strategic. Deliberate, intentional, and strategic. So what do? You must create a saving plan. Save not just for the rainy days, but for sunny and opportunity days. When you save, and along the line, that savings can become an investment. So from time to time, look at opportunities to invest here and there, so that when tomorrow comes, you'll be able to have something. I've seen a lot of people, my colleagues in the banking industry, many of them, a year, 2 years after they have retired, they are going there, they're going ahead, are begging. It's not the best. So make a while the sunshine. While you are still in active work, ensure as much as possible to save. And let me tell you something. There's no amount of salary that you are paid that can be enough. That's the truth. No amount of salary that you are paid that can be enough. Somebody described job as just over broke. So it's from hand to mouth. But no matter how little and no matter how much, ensure you have a saving plan for tomorrow. Thank God today for the Pencom Act, pension scheme. It is mandatory that between you and your employer, you contribute 18% of your basic transport and housing. But I advise people strongly, my colleagues, and I do it, that I still have what I call voluntary contribution, apart from what the government is taking from me, or my employers are taking from me and helping me to save. I also deny myself some luxuries to save for my future. Because gone are those days. Those days, our parents think that we are their investment, they are their future. But today, is it a child that's still in your house at 35 that you want to rely on when you retire at 60 or 65? So you must save for the rainy day and for the sunny days. Have a diversified investment portfolio. I've mentioned that before. Do not put all your eggs in one basket. Avoid the grandstand lifestyle. You need not to impress anyone. At this level, you don't have to impress anybody. Do within your means. Don't say because others are buying this, are buying that, you must buy. No. You just be piling debts upon debts. Disdain get rich quick approaches. I saw something yesterday on social media that made my heart to bleed. A 15-year-old boy, 15-year-old, taking his friend to Babalawo to be used as money ritual. He wants to buy a Benz G-Wagon at 15. Our system, our society has stimulated so much that everybody now is looking for quick money. So don't do that approach. Reduce your debt profile. If you are piling up debts, please try and reduce it so that you won't leave yourself heart attack. Take stock of your money and how it's spent. You must be frugal. You must be frugal. You must not be a spendthrift. I'm not saying you should be stingy. Be frugal. Don't be a spendthrift. Keep account of how money comes in and how they flow out. Create a monthly budget if necessary, and it's necessary especially for those of us who are still upcoming in our professional career and life. Automate your bills. For example, you won't default in any financial obligation. For example, your power bill, your light bill, your whatever. Some of them that can be automated, please automate them so that you'll be having what we call they call it a kind of standing order. Sorry, thank you. Standing order, yes. So that at any, whether it's 3 monthly or monthly, your bank will automatically debit your account and credit the provider of those social amenities. Use credit. Take credit to invest in assets and not on liabilities. It is not bad to borrow, but it's bad to borrow for convenience. Yes, in the US and UK, they use credit card to buy everything, including toothpaste and whatever. Nigeria is different. So if you're going to borrow at all, I beg of you, especially in this climate, beg for and borrow for investments. Borrow to invest in assets, all form of assets, all class of assets, so that don't borrow to invest in liabilities. Don't go and borrow money to go and buy a car. A car is a liability. Okay, if I want to be kind to you, I'll call it a wasting asset. Actually, it's a liability because from the day you bought it, you are investing your money in petrol, in repairs, wear and tear, and so on and so forth. So I'm not saying you should not buy a car if you need to, but don't go and borrow money in the bank. Especially some people go to microfinance bank to go and borrow money to buy a car, and you pay 3% per month, 2% per month. It's sad that you need to be very careful. I know that I'm talking to our enlightened, but if you have the temptation to go and do that, please don't. Increase your propensity to earn, which means try as much as possible to have streams of income, different streams of income. Build more income streams, create an income for life. Robert Kiyosaki said, do your work, mind your business. Even if you are working for somebody, you can still set up a business beside, especially if you have a wife that is a home manager. Have a business that can be telling on your behalf. Like when you retire, you won't retire to nothing. So have streams of income, more than one, more than two if possible. Types of financial instruments, I've mentioned that before: equities, debt instrument, cash instrument, and derivatives. And you can actually study that on your own. Common asset under equity instrument, I've mentioned stocks, convertible debentures, warrant and option. What are the benefits of equity? Please help me go to that. benefits of equities, benefits of investing in the equities market. Please go to that slide. Unfortunately, my slides are not numbered. Sorry for that. Can you please help us to go to the slide where you have benefits? Okay. If go forward. Yeah, thank you. As a general rule, investing in equities is better because equity investment instruments make more money from capital gains than other types of investment. Yes, for example, I mentioned while I was talking earlier on that you can buy shares at 5 naira, and the next 2 months it becomes 7 naira, 8 naira. You don't have to wait for dividend to sell. If you have 60% already, of course, depending on why you are investing, are you investing for a long term or you are investing for quick returns? For example, there was some shares I bought sometimes last year, I think, a particular stock at 10 naira or 10 naira 90 kobo. Within 1 month, it moved to 50, 60 naira. I sold up. When I sold up, I looked stupid. Then before you knew it, the thing came back again to that 10 naira. Some I sold up, it never came back, it was going up, but the fact remains that within 1 month, I gained 40-something%. What am I looking for? That's more than enough. So ensure that when you are investing, you're also monitoring the market and you have an investor or portfolio manager who is doing that for you. The benefits depend on the type of equity. For instance, if you want to invest in companies, you have the option to diversify your portfolio by investing in a lot of different companies. Like I mentioned that before, you only need to choose the equity market that fits your needs. And you can also do mutual. If you do mutual funds investment, what that entails is that some manager will be managing it for you. They invest part of the money to be in a basket. They invest some in the stock market, some in the money market, and at the end of the day, it hedges against losses from either of the markets. Sorry, my iPad shut off. Okay, so I was talking about the benefits of the equity market. Stocks and shares are easily transferable to others. So when the shares price goes up, you can trade at any time through your stockbroker, of course. As a shareholder, you also have the right to get dividends and interest every year if the market is doing very well. Stocks have a long history of giving investors more money each year than bonds or cash investment. In addition, if you own preferred stocks, you get to be the first person to get a loan. If you have a preferred stock, if a preferred stock, if dividends are being paid, you'll be paid first. And if there are issues, if the market is, if the company is holding up, of course, they pay the venture owners. If there's fund, they pay all their loans, all the first level loans. They pay all their creditors that are priority. And of course, they pay preferential shareholders before they pay ordinary shareholders, if anything is left. But because of lower interest rates, convertible debentures have a guaranteed income stream for investors and less money spent on interest because they can be turned into stocks or bonds. Treasury bill, that's money market. They are monetary policy instruments issued by the CBN in Nigeria to either borrow money from the public or for monetary policy measures to control inflation. It is dependent on economic factors like inflation and policy direction of the government. The tenure is usually for 1 year or below, and could be for as low as 30 days. So, Treasury bill at a point in Nigeria was earning good interest, much more than the capital market. But there was a period in Nigeria 2 years ago or so that you get 18% and you even get your interest upfront. And that was 2 years ago, 3 years ago. But that has changed now. You have the CP. You still talking about the commercial paper. This is a money market instrument issued by large corporations like the Cadburys of this world, the Dangotes of this world, and so on and so forth, with the support of the central bank to fund its short-term funding gaps. Tenure may not be more than 270 days. Interest rate is also determined and approved by CBN. You have the bankers' acceptances. The mutual fund in particular, I want to mention, like I mentioned before, is a way of diversifying your risks. Instead of investing directly in the capital market or investing directly in the money market, especially for those of us who are low-income earners, who don't have so much that you can invest alone. You can put this money in the mutual funds. There are many banks today or corporates today that have mutual funds being managed, especially the banking industry. And if you invest your money, the professional managers will help you to invest that in a basket of mixed investment outlets, capital market, money market, bond market. And at the end of the day, you are better off because you get something in return. Instead of you buying just 200 shares in the company, 300 shares in the company, that will give you next to nothing. A mutual fund manager will help you to invest wisely in different end of the market, thereby you are getting better return on your investment. Of course, time deposit is depositing money in the bank. In conclusion, please let's go to the conclusion page. A financial market instrument is a real or virtual document representing a legal agreement involving any kind of monetary value. Financial instruments may be divided into two types: cash instrument and derivative instrument. Financial instruments may further be divided according to an asset class, which depends on whether they are debt-based or equity-based. Foreign exchange instruments comprise a third unique type of financial instrument. There is no end to learning in the financial market. Remember, money is good, it's a good servant, but a bad master. The source of all enduring and lasting wealth is, of course, God, depending on which faith is yours. Always put God first. Don't make money your God, make God your God. Walk in the way of the Lord. Do your best, and of course, God will continue to back you up. And like I said earlier on, in all cases, always seek professional advice for investment-related matters. And there are many investment advisors. You have your accountants, you have your bankers, you have your stockbrokers, you have your investment advisors, you have your portfolio managers, and so on and so forth, who will advise you on the form of investment to take per time. And of course, even after you have them, always ensure that you are alive to your own responsibilities too, by monitoring the market yourself. Thank you very much for the opportunity to speak with you today. God bless.
Thank you very much, Dr. Bayo Olugbemi. Very, very insightful, deep, and well-detailed presentation. Thank you so very much. I know without any out of doubt that our participants have gained tremendously from your presentation. Thank you very much, sir. Okay, very good. Take maybe one or two questions quickly before we'll move on to the next segment. So I can see Mr. Yakubu Yusuf. Please just go ahead, sir, and ask your question or make your contribution. Please unmute.
Okay, good afternoon, everyone. Once again, we've had another vibrant session. We have another knowledge imparting session. Thank you, Mr. Bayo. I have very few questions. I want to start from the level of the current position of CBN to increase the MPC rate by 100 basis points. How does that help investment in the capital market by virtue of its impact on rates. You know, the other time they increased it and a lot of things happened in the capital market. The stock market was almost going down. Now, what impact is this one going to have on the capital market? Number two, you know, the SEC has the obligation, the task to protect investors' interests and develop the capital market. Now, a lot of people exited the capital market from 2008 when the market went down to now. And you said, yes, a lot of them are coming back now. But there are a number of new regulatory positions of SEC, like the renewal fees, annual renewal fees that has been so.
Sorry, please.
Yes, sir.
Just go straight to the point. Is it the question of?
I'm on the point. He knows. Okay, I'll conclude now. Now, you know, does it encourage the people, the current position of SEC, does it encourage these people to still come back? Do they have the wherewithal to come back and re-register, re-enter into the market? And the new professionals, how do you see the encouragement for them to enter the capital market operation as registered professionals? Thank you, sir.
Thank you very much. Second question. Let's not confuse investors with capital market. They are two different people.
I thought you said you were going to go and do.
A lot of investors are discouraged coming back to the world. However, like I said, because SEC is more alive to their responsibility in terms of the regulations and the rest, people's confidence, investors' confidence is coming back little by little, and they are returning. Especially even foreign investors are investing in Nigeria heavily. That is the truth. I'm the capital market. I know a lot of investors are bringing their money, but one thing they look for is return on their investment. When they have little 50-60%, they go out again. Their portfolio investors, they come back. So the issue of capital market operators, let's truth be told, all of us in the capital market, we are making money one way or the other. I may not agree with the percentage increase, okay, which SEC has been magnanimous enough to even revert back to the status quo ante, pending when we discuss and we agree on what it should be from next year. But let you be told, there's nothing wrong in making CMOs to pay some money to SEC as renewal fees. I don't think there's anything wrong in it. But it's just the quantum that we contested the market, and SEC being a listening regulator, listening to us and reverted, though I think we are still discussing to know what it should be going forward. So it doesn't have anything to do with discouraging investors. You may say this to discourage capital market operators, but truth be told, also in most of our segments, brokers, registrars, we are too many. That's the truth. Some of us should merge our operations together to get vibrant CMOs. That's my answer to that question. On the issue of CBN.
Sorry, I didn't say it will discourage investors. So I just asked what is the impact. So I didn't say it will discourage investors.
Yeah, but you started from talking about investors.
Sorry.
It doesn't have anything to do with investors. That's a lot to do with capital market operators. And I think fear is fear. Let's SEC also make some money from us, then it shouldn't be too lopsided, so to say.
Much.
It shouldn't be too much. So on the issue of CBN and MPC rates, it's never here nor there. Let me tell you.
The man went to.
If people see,
went for the first time.
If people see good return on investment, they will still come to the capital market over and above. Because for the money market, in most cases, you may not have the kind of returns that you get from the capital market, especially when it has to do with capital gains. For example, you bought shares at 5 naira, and under 3 months it goes to 7 naira. You can't get 40% as interest on any deposit in a year. How much more getting 40% in 3 months? It can go the other way around too. But in most cases, I think people are still investing in the capital market, and you see a lot of, despite the 100% basis point, people will still be in the capital market. Thank you.
Doctor, thank you very much. You have really done justice to the entire subject matter. But my worry is the level of inflation and the effect it has in either money or capital market. Let me give an example. You have 100,000 naira, you invest 100,000 naira in financial market, and you are able to, at the end of the day, maybe at the end of 1 year, you are able to make 20% profit or gain. But between the time of investment and the time your profit comes in, the inflation has risen by 30%. Is it worthy investing in capital money market now with this parallel inflation? Okay. Especially due to thank you.
I will answer you this way. The money, if there are other areas where you can invest, why not? That's why I said you must have a diverse portfolio. Money market, capital market, FX market, even real estate market. But if you don't have alternative, you can't keep your money under the pillow. If you are earning 0%, for example, and inflation rate is 20%, that's 20% absolute figure. But if you are earning 10%, 15%, and the inflation is 20%, you are still 50% better off. You are -5. But you should at all times try to invest in asset classes that will hedge against inflation. That's why you must have a diversified portfolio. That is just the antidote against it. You can't say because inflation rate is 100%, then you keep your money in under the pillow. Or just do nothing. You must do something. And it's not static. At times it can come down again. So if you are not investing, that won't happen. And like I said, it's better I get 10% return than get 0% in return. If inflation is 20% and I get 10% return, I still 10% better. But like I said, if you have other asset class, that way I can go for it. And like I also said, at all time, consult your investment advisors, professional advisors.
Thank you very much, sir.